All right, guys. Wow, the weather is amazing. I am on the beach. I've become filthy rich off this YouTube channel. Yeah, right. We just bought a $30 green screen, and guess what? Now I can be wherever I want. So, bending the tax rules in your favor. Okay, a really important video today. I think I'm going to save you between $500 to $1,000 when you go to your accountant for this information. In today's video, I'm going to talk to you about building wealth as a truck driver. I'm going to talk to you about setting up your proper corporation. I'm going to talk to you about how to properly purchase a truck. I'm going to talk to you about financing. I'm going to talk to you about the difference between dividends and payroll and how you should be paying yourself as a truck driver, whether you are a lease operator or owner operator, or if you're a truck driver looking to become a lease operator or owner operator. This is going to be extremely beneficial for you. I've seen so many drivers make mistakes on how to pay themselves that I really think I need to take about 5 or 10 minutes to talk to you about how to properly set up a corporation and what to do when you are an owner operator or a lease operator. Talk a little bit about the difference between dividends and payroll. Okay, so let's get to it. So the first topic I'm going to talk about is your setting up your corporation. So if you're a lease operator, or if you're an owner operator, if you are about to buy a truck or thinking of buying a truck, you really need to set up a corporation. Now, I don't care about all the comments that are going to say, oh, I'm a sole proprietor, I don't need to incorporate. You do need to incorporate because of the tax advantages that you have as a corporation. So you can definitely do a lot with your corporation. I'm not going to get into every detail, but the major ones. Now, when you are buying a truck, okay, you really need to, you as a person, need to fund the money into your corporation as a shareholder loan. So whether you're in Canada or in the US, the rules are the same. So you as an individual are going to be buying a truck through your corporation. Make sure that on that bill of sale, it says your corporation name. Okay, so you're going to be depositing money into your corporation and you're going to register it as a shareholder loan. So you as an individual are going to put money into your corporation and register it as a shareholder loan. Why do we do that? Because whatever you put inside your corporation as a shareholder loan, you are able to withdraw it tax-free. So at any given time, so I'll give you an example. A driver of ours went to buy a brand new W900. He put $50,000 down on his truck. If you're gonna put that through your personal, not so good. If you take that $50,000, deposit it into your corporation, okay, and then from that corporation, you're gonna pay that $50,000 as a down payment for the truck, well, now you're able to withdraw $50,000 out of your corporation tax-free, okay? Huge one. A lot of people don't do it right. So the $50,000 goes into your corporation gives the deposit for the truck, and now you are able to withdraw $50,000 over the course of however long you want. You're able to withdraw that money for yourself tax-free. Okay, so that's number one. Number two, paying yourself as a driver. Now, there's a difference between paying yourself as a driver through dividends or through payroll. Okay, so if you do want to write the taxman a check for CPP, EU, EI, in the US, there's federal tax, provincial, state tax. You would need to pay that on a monthly basis. Most drivers don't want to deal with this nonsense on a monthly basis and pay and open up a payroll account. So what do you do if you have one truck and you're an owner operator? You take yourself a salary through dividends. Okay, so you're going to be paying your corporate tax and you're going to be paying your personal tax through your dividends. Okay, rule number two, withdraw yourself a paycheck. Okay, so you need to withdraw yourself a paycheck every 15 days, just like you would if you were a driver. So pay yourself your 60 cents per mile, your 50 cents per mile. You kind of want to get to that really good, comfortable number, the amount that you need to live. Okay, not more, not less. So if you live off of $3,000 a month, pay yourself $3,000 a month. If you need $4,000 a month, pay yourself $4,000 a month. But keep the wealth within the corporation. Don't withdraw all that money out. Okay, so make yourself as if you're really working in a company. Every 1st and 15th, I mean, today through our phones, we could do everything. Pay yourself every 1st and 15th, whatever amount of money that you need from your corporation to your personal bank account, and make sure that you use your personal bank account for everything else and not the corporation. Don't milk out all the money from the corporation. Okay, you're going to need that money and you're going to need to build wealth within that corporation. Things that you need to definitely think about, okay? So when you are purchasing a truck and when you are purchasing when you are financing your truck. So your truck has depreciation. You need to expense the depreciation in your corporation. So for example, you buy yourself a $150,000 truck. That truck is only going to be worth $130,000 or $120,000 next year. Between $150,000 to $120,000, there's $30,000 that you need to depreciate off of your books. It's like an expense. Okay, so you need to make sure that through your corporation that you're expensing things properly. Another thing that you can get into is there's a lot of gray areas in taxes. So I'll give you an example. A husband and wife, the wife prepares meals for the husband when he goes on the road. Well, guess what? All that shopping that she does, all the groceries that she does for the house, 50% of it or 20% or 30% of all this shopping goes for her husband while he's on the road. Well, now you can expense all that. Okay, there's a lot of gray areas in taxes that, if you're a truck driver, that you're allowed to do that. Your meals, your lodging. Those are all normal expenses that you can you can expense through your corporation. Another thing, if you're a husband and wife and your wife does the books for you, or you take a reputable tax accountant that does the books for you, but in the situation that I'm talking about, let's say the wife does the books for you and you want to give her a salary, that salary is taxed at a much lower tax bracket. So I'll give you an example. A driver makes $100,000 a year. He pays himself $50,000. Well, now he has $50,000 stuck inside his corporation. In Ontario, income tax rate is 13.5%. Well, 13.5% is a lot lower than paying 40-50% on the personal side. So what you want to do is you want to expense that by giving your spouse a salary, a minimal salary, whether it's $10,000 or $15,000 or $20,000 a year for doing all the books, for doing all your, whatever it is that she does and takes an active role within your corporation. You're able to give her a salary. If you're taking a $15,000 salary or a $20,000 salary, that tax bracket is very, very low, and it is very beneficial for you to withdraw the money from your corporation to your wife at a very, very low tax bracket. So if you're making 100 or 120, you want to pay yourself that 50, 55, 60, and then you want to be paying your wife, the 10, 15, $20,000 because it will be beneficial for you. Now, what do you do with all that extra money inside your corporation? Well, that's where you start buying assets. That's when you start buying an asset that goes up in value. You want to invest in stocks, you want to invest in purchasing properties, you want to invest in whatever it is that you want to invest in. You do it through the corporate level and not on your personal name. Okay, because anything that you withdraw from the corporation personally, you're going to be paying personal income tax. You want to avoid that. You want to pay the corporate tax rates and use that money to build wealth instead of paying it to the tax man at the end of the year. Very, very important, guys. I am not an accountant. Okay, I just see this on the regular, and I talk to drivers all the time, and I do talk to tax firms, and I have recommended a company that specializes in taxes for truck drivers. They do the quarterly, they do the the annual tax returns. I've been getting really good feedback about this company, and I've been hearing a lot of good stuff about them. And the drivers that are using this firm, they're extremely happy. So I am going to link their contact below, and if you want to give them a call and contact them, just mention our video that you've seen it on this video and reach out to them, and they'll be able to give you their consultation and be able to guide you to make the proper decisions when setting up your corporation. Again, for my American fans, I'm really sorry. I don't have a tax company to recommend in the US, but maybe you guys can recommend somebody in the comments down below. The company that I'm recommending, they're solely in Canada and they specialize in truck drivers. So whether you're a company driver, owner operator, a lease operator, that's all they do. So guys, another gray area that I've learned, and this is unbelievable. So for all you owner operators, truck drivers, for you lease operators out there, did you know that if you have a dog that's a support dog, so an emotional support dog, you're able to expense all of his food, you're able to expense all of his or her expenses. So I just learned this. I thought this was amazing. I know we have a lot of truck drivers that have dogs inside their trucks. They are support dogs, emotional support dogs. So you're able to expense a lot of the dog's expense within your corporation or within on the personal side. So definitely get a hold of these tax accountants. And if you do have a dog, mention that you have a dog. And these kind of gray areas, just like the grocery shopping, just like the dog, there's lots and lots of gray areas within taxes that you can take advantage of because you're a truck driver, because you're an owner operator. You could take advantage of it and expense a lot of expenses through that corporation. So take advantage of these tax rules that we have here in Canada. I'm sure the US is almost identical to our tax rules, but really take advantage of this and make sure you start building wealth within your corporations. So don't forget to subscribe to the channel and put a comment below. I read most of the comments. I respond to most of the comments. If you agree with what I said, even if you disagree with what I say, put the comment down below. That's okay. We can go back and forth a couple of times and talk about, your opinion, my opinion, where we differ and where we can what we can agree on. I'm Ronan. I'll catch you in the next one.